All right, what a big day it's been. 4 videos, PUA, EIDL grant, proposed second stimulus check, and now this is a surprise video. What is it about? Namely, we are here to start giving you our opinions about which stocks we think you should apply for, you should buy. You know, in the last few days, a lot of you have dropped comments in this channel that's basically very new. This is only our first week. In discussing EIDL grants and SBA loans and all that type of wonderful stuff. You've been asking us questions about real estate, asking questions about stocks. And you know what? We're going to start doing it right now. So what we're going to start answering is your questions about what stocks you think you need to be in and where you need to stay away from. And with that, start dropping comments and we will start answering them and turn them into videos for you. And if this is something that's of desire for you, we'll blow it up. So where should you be in equities at this point? Where are we in the circle? Where are we in a double dip? Are we in a V curve? What's going on? There's a lot to back up about. First of all, as you'll see in the last 7 days, a couple companies reported. Facebook reported, Apple reported, Microsoft reported, Tesla, Elon Musk went on sort of a little rant. It's all over the place. And the best thing to really advise at this point is that do not subscribe to any analyst that you see on television who can tell you exactly where we're going with coronavirus and is buying the position based upon that belief. I will tell you right now, that is just ill-advised. It's really ill-advised. A lot of people in the first few days, and they're still doing it now, are telling people to buy certain stocks, whether it's Netflix or whether it's Walmart, based upon their thought of where coronavirus is going to be. Oh, Walmart's going to make a fortune because everyone's going to be at home and they got to buy Walmart. It just hasn't happened that way. It hasn't happened that way. It is sort of a presumption that because you know what the situation is, you know how the earnings are going to be on the back end. That is not how you should be investing, and I'll tell you why. When you invest, there's 2 ways you usually invest when it's for purposes of equity. You're either buying for a short term or you're buying for long term. I'm going to tell you that you always should buy for long term. And long term, I mean at least 6 months. You should never be buying for a day or 2 weeks or 3 weeks, because things are too volatile, and we're never going to report anything like that for you. So in a 6-month period, where should you be and where should you be acting? If when you sat back and saw coronavirus hit in mid-March and were worried about a position, how would you flavor that differently today? And I'll tell you the following. This is how you should think about it. There are certain companies that reported earnings this last week, and in stating their earnings, they said, hey, coronavirus hit, but it really was no impact on our business. Our business is not exposed to coronavirus in that regard, or we are exposed on two ways. For example, Amazon said that because of their computing services, they had more earnings on gaming clients that use their platform and less earnings on companies that were shut down because, like hotels and things like that, because of stay-at-home orders. And so for them, it was sort of a wash. Now, you could have known that. I mean, you could have known that when COVID-19 hit. And if you had turned on the TV and saw someone say, oh, Amazon's going to be way up because everyone's going to be staying at home and ordering a lot of stuff on Amazon. No, you know how it works. Amazon has platforms, and those platforms are exposures. So it's all about exposure. It's all about exposure for today. And the concern is that you should not be in positions that have that type of exposure unless you really know where we're going, and no one knows where we're going. And if you think you know where you're going, you shouldn't be doing it because you really don't know. We don't know where the stay-at-home orders are going to be as impacting a casino or a Las Vegas Sands or an MGM Grand or a hotel that has several operations in Macau. You don't know what's going to be happening in a few weeks from now. I don't know what's going to be happening. And if it's in a great situation a few weeks from now, how do we know it's going to be in come fall of this year when COVID-19 is supposed to recircle? For companies that fully disclose to you their exposure in certain areas, Then maybe you can assess the risk, but in some cases you really can't. I remember early on when COVID-19 hit, a lot of people were talking about Tesla and how much Tesla has a presence in China and how bad China is. Well, again, that was ill-advised because everyone was focusing their attention about valuing Tesla based upon its China exposure. Well, here we are today, and COVID-19 is in the United States, and so that was not part of their analysis back in March. And you see how things are skewed. Where are we in the circle at the moment? I think the market's a little bit too happy at the moment. I think the numbers are still a little bit too uncertain. So if something is very rich, if something is near its 52-week high now, it is not something that you should be jumping at. If something's $10 off of its 52-week high or $20 off of its 52-week high, and it's a $200 stock, you shouldn't be jumping to grab at it either. I'm not saying you shouldn't be buying it, but this could dip again. Where should you be focusing and where should you be doing your attention for? At this point, liquidity is a concern. And loan obligations from a lot of these big institutions is also a concern. Whether it's banking, aerospace, travel, hospitality. I mean, even saying those four words, it makes me a little nervous. Do you want to be in hospitality? Do you want to be in travel? Do you want to be in air? Do you want to be in Boeing? Oh, my God. But when we talk about technology, how about technology? Well, if you understand the exposure, you understand the risks, and you understand the charts, which is what I'm going to be talking about. If you do like this type of discussion, I'll be doing these videos for you daily. If you look at the charts, which I'm a very big chartist, I focus on charts indicate to you where things are and where they are going. If you look at the charts, you see despite the magnitude of what we've gone on with COVID-19 over these last couple of weeks, if you see these charts and we're still at the high end, you're still at, almost the 52-week high. Well, then, hey, you shouldn't be jumping in. It's too premature because we could double dip. You understand the volatility the market has eased out in the last 7 days that this channel has debuted. There's less volatility out there, which is a good thing. But what stock should you be in? What industry should you be in? How should you be buying? How should you be doing your research? We can cover all this for you and more. We love this type of discussion. If you want it, like this video, comment. We will answer your questions. We will gauge our videos based upon what type of things you want us to talk about. And we will kick this out of the ballpark for you if this is what you want. We love it. And you can only do coronavirus so many weeks of a YouTube channel, but equity trading is here to stay. I mean, it's not going anywhere. So drop us some comments, like the video, subscribe, and if you want this, we'll deliver more for you. For now, stay with LA for more.